Ladies and gentlemen of the crypto space, we're live on a Monday, January 24th at 11:35 a.m. This is a big day, and it's very important to not think the way everyone thinks. The only way to potentially understand these markets is to think like something almost everyone isn't. You have to think like the wealthy. We get small glimpses of the wealthy through published or transmitted stories and ideology on social media and news media. In the crypto space, we have very interesting insights into whale activity by looking at wallets, so on and so forth. But there's some very high level observations that I have and things that I think that make perfect sense. I draw on history. I look to Warren Buffett. I see the way the whales are operating, and it all is way too obvious. It's about power and control. It's about the dollar, which is the fixed unit of account that is prevailing, the status quo around the world. Bonds have a role to play in the stability of capital flow. And you can understand macro to a certain extent to assess the stability of the system. We all know it's pushed to its limits right now. And right as we speak, I'll pull up the chart and you'll see the broad equity indexes are getting crushed because we are looking at market actors in the space that are in a frenzy. They're fearful, they're scared, they don't understand. But you know who's not fearful? You know who's not scared? It's the large market actors that have been through experiences like this. They have their fingers on the pulse of macroeconomics. They know where the collateral is churning around the world. They have a sense of political uncertainty and those complexities. They have their understanding of how the policymakers and the regulators are going to respond to attempt to stabilize the system for one purpose and one purpose only: to maintain order and to maintain control. So it's important. Well, this is what I think about and I think it's important to understand these very broad concepts that are way outside the scope of the crypto space. And what everyone's mostly here to talk about is price go up, price go down. But to know and to understand why capital is going here versus there, you have to understand these big macro influences, especially and most importantly, the way the biggest players in the space are thinking about money and value and how they handle their capital. All right. Well, I guess a good place to start. I want to get the comments, obviously, but I know folks are going to talk about specific assets. But this is not a period of time to talk about really specific assets because a lot of people are like, what do I buy? Everything is down. What do I buy? It's going to go up. Now is a time more than ever to have patience to think things through. Now, bear in mind, things go down, people buy, they go back up, people make money. I'm not in this space to make money. Folks that listen to me know the way I've spoken for the last 2 years. I'm in this place, in this space, to express rationality. It's my brand and it's the way I think. And capital tends to flow to persons that approach things pragmatically and rationally. Here's the most important thing, highest of levels. People that have made the biggest money throughout history, sure, insider information, deals, getting in early seed rounds, so on and so forth. The vast majority of persons have a combination of right time, right place, but most importantly, they didn't force it. The second you try and force a portfolio into a position to try and outperform, the odds are almost insurmountably against you. You cannot force this. So, one, I guarantee I will not outperform. I will not do the best as compared to peers, as compared to some of the biggest winners in these markets. I will not achieve that. That is not my goal. My goal is to express consistency, um, rigorously thought out ideology, and stick to my plan. You have to follow your rules, you have to follow through, and you have to be consistent. where do I go from there? So, what are large players thinking? Large players think in terms of one thing: dollars. And in this instance, in the crypto space context, it's stablecoins. What are the largest players doing? The largest players are engaged in probably the best opportunity in history, in my opinion, stablecoin yield farming. Stablecoins are massive. They're a massive deal. They're bigger than most people realize, and I'm beginning to understand that it's probably the biggest uh, component or the biggest expression of the entire crypto space. Why? And I won't delve too much into traditional financials, but you have the dollar, you have all these bottlenecks around the world, and much of the entire financial system reduces to sovereigns' capacity to distribute fiat currency. And the most the most powerful or influential fiat currency thus far is the dollar. There's complexities going on, but that's besides the point. So dollar dissemination, let's just say. And what happened at some point in history? The euro dollars emerged, and they did that because of dollar. They were short. Everyone was short dollars. So where the hell do we get dollars? And that's why Eurodollars emerged. And that leads me to where my mind is thinking why stablecoins have a massive role to play in catching the eyes of traditional finance, catching the eyes of sovereign nations, because they facilitate the expansion of currency such that market actors have a greater chance to have access to base units of account. Shortage of base units of account create excess demand, and that creates instability. So, as currency demand can be met, there's a potential for more stability and a potential for financial growth and prosperity and increased GDP and all that fancy shit. So, who have I noticed has been executing like clockwork? Clockwork. And take it for what it's worth, it's Justin Sun. That boy is farming the crap out of stables. And what does he have? He has a muted risk profile, little to no downside exposure, depending on maybe he goes on the risk curve for some high yield on some questionable stables, but he's focusing on limited downside and just yield on stables. The boy's in pure up only mode. It's got to be the best opportunity I could think of, risk adjusted. And where does one take a smaller portfolio to get to a larger portfolio? As I said, you cannot force a portfolio. The second you try and force a portfolio, you're taking on excessive risk, and the vast majority fail. Now, obviously, there's random acts of brilliance. There's actually expression of brilliance, of which I know at least one person that I'm very impressed by in all regards. I won't mention persons, but what he has achieved is quite rare and extraordinary, absolutely extraordinary. But that's okay. What's important is he has his path. He has done what he's done, and he's been successful. And I must not try and duplicate what someone else has done. I must stay to my path, and I must continue to be consistent in my execution based on the way I see things. You all must do the same. You have to define your own rules, and you have to live by them. And that will lead to success. So you must be risk considerate. Focus, in my opinion, in 2022 on growing stablecoin positions because shit, what else are you going to buy something with? You buy things with stablecoins, whether it's an asset or food or pay rent or pay a mortgage or whatever the hell you want to do. That's everything. So what are we doing if we're just holding assets? We're exposing ourselves to excess volatility. Now, if you're getting through this period of time in these markets and your portfolio is higher in dollar denominated value than where it was historically, you're doing well. What do I always say? We must learn from our experiences. Right now, what's going on in these markets, there's no action to take. Right now is a period of evaluation and assessment. You must digest what actions you took to get you to where you are. And you're going to pivot and pivot hard to take better actions to make sure everything you did to get you to where you are continues to happen going forward. You have to iterate. Just like I talk about iterating on monetary policy, you must iterate on how you attack markets, capital markets. Be rational, boys and girls. That's what I always say. That'll lead you down the appropriate path. And there is much pivoting to make. And I myself, over the last week or two, know of many things and many strategies and observations of the market that are going to take me in a very different direction than I took in 2021. And I am a completely different person as compared to 2020 and definitely years past. Nothing I do heading into 2022 is anything that I would have remotely thought of with regard to actions to take to attack a market historically. So this is a new ball game. Some serious stuff going down. There's serious political stuff going down. Macro financials are in historic territory. I mean, seriously, if you take a look at the monthly on the S&P futures, this is the largest monthly red candle period. Now, clearly, we have 7 days left for a close, but from candle body open to candle body close, if we close anywhere where we are, this is the largest red candle body close ever. So we're at a period of time where serious stuff is going down. And if anything, that should reinforce in your mind that you need to be rigorous. You need to be crossing those T's and dotting those I's and assessing what the heck you did to get you to where you are and how you want to pivot to move forward. Justin Sun cranking out yield on stables brings me to probably Warren Buffett's ideology of how it's most rational to outperform and to grow wealth. And that is a topic that you guys know all too well. That's infrastructure and cash flow and just owning cash flow, accumulating cash flow, and deploying cash flow strategically to grow cash flow. And you take a portion of cash flow as income, you grow your stable coins, you generate yield, and you grow your more and more stable coins. And I think stable coins are going to be a significant source of revenue going into the future. I mean, seriously, if you're getting 10, 15, 20, 30, 40, 50% on stable coins, holy crap! What the hell are we doing taking risks? Anyone that did a 50x on the portfolio between 2020 and now, what the hell are you doing taking risks? And that is a major consideration. Too many folks head too far out onto the risk curve. My ideology and the way I look at a lot of assets is changing. The price action is meaningful. Price action alone does not contribute to narrative validation, but it must not be neglected and warrants narrative modification. We need to always be considerate of the average market actor, probably more so than a lot of other components of an evaluation. What does this chart say? The average market actor involved with the curve asset is weak. Weak market actors. Now, the narrative for the asset's extraordinary. MMT money printer, you get a gauge on an asset. You basically going to have critical mass liquidity for whatever pair you can imagine. So that's power. That's a moat. That doesn't mean anything for the curve asset. That just means the protocol is extraordinary. It's entrenched. It's invaluable and it's significant to the functionality of the crypto space. You get a gauge. You could get a protocol off the ground without excessive capex. You don't have to gouge a treasury. I get token XYZ off the ground. I no longer have to fork over millions of tokens in order to incentivize critical mass liquidity. All I need to do is bribe or strategically, however necessary, acquire a gauge for my curve V2 vault. That'd be very nice. And now I have less capex I need to expend. And so you have a much more capital efficient way of achieving, or hopefully achieving, critical mass liquidity, which is a critical component of a protocol's token actually attaining validity and attracting market participants because it's going to be more stable or at least more liquid, such that people can actually trade it without absolutely insane price volatility that is a detractor to market participation if an asset goes up and down too much. So who controls curve gauges? It's probably convex. And at this point, who controls convex? So my opinion going forward into 2022 is think about it like this. You got a sequence, you got a chain, you got curve, you got convex, and you got a whole bunch of protocols that are fighting over convex. Sure, the rabbit hole probably goes deeper, and you can have protocols that control protocols that control protocols. Great groovy grant. What's the most important thing to consider? If you have a chain of protocols that are controlling one another, I am not a fan of excess diversification. I'm a fan of concentration. So I don't necessarily want redundant exposure to anything. I want to be heavily concentrated. I want 30% of my portfolio in this, 20% of my portfolio in that. I want to own 3 or 4 core assets. You go out on the risk curve with 1% bets, as I've talked about, to an excess at times. And that's how I structure a portfolio, and I believe that's me having a rational expression, and it makes sense. So I have been excessively diversified, curve, convex, frax, whatever. This is an interesting presentation. Who owns convex? Badger's pushing up the ranks. Frax, we know what they've been. Wonderland, based on this presentation, has a position, redacted obviously, with Tetranode at the helm. I mean, Olympus, there's some very, look at the money that Olympus, the money that Redacted and Keeper, interesting. Interesting they're on the list. It looks like they did buy. So these are very powerful positions to be in because ultimately, indirectly, they own the keys to the kingdom, a capacity to get critical mass liquidity for an asset. So, you know, maybe Curve is turning into a red herring with regard to a potential rational position or part of the portfolio. And maybe even Convex is turning into a red herring as well. I mean, what the heck is Tetranode thinking? Why would he have a large position in Convex if he could just have indirect exposure vis-a-vis his Redacted? I mean, he basically controls Redacted as well. So he has redundant exposure, he's diversified, and he doesn't have a concentrated position. He's exposed to the same sequence, the same protocols that are controlling one another in multiple links of the chain. I think that's redundant. And he may come to that conclusion at some point. Anyway, I'm not going to digress too much. Wonderland pivoted. They're no longer inflationary. That's an extraordinary thing. They're a full on DAO. They're going to have pass through revenue. They're buying things and pivoting. We all know the way Danny thinks and the way Sifu thinks and Squirrel. These boys have great ideas. Price action that's going on is completely independent to what the protocols are doing. Because, as I said, as you could see in this chart, the market actors are irrational. The average market actor has no idea of the stories that I tell or what these protocols really mean. They see price go up, price go down, and they freak the frick out. So what does Justin Sun do? He just is a predator. Be a damn predator. Because if you're not a predator, you prey. And goes back to the title of the stream. What the heck are the wealthy doing? The wealthier predators are capitalizing and extracting units of account, dollar denominated assets, and strategically purchasing cash flow. That's what Buffett does, and that's what all the big boys do. At least the most rational of actors. Convex is getting hammered pretty hard. Let's pull up the chart as well. There's nothing left. The TWAP on the weekly shot I don't even know what this green line down here means. It's nothing significant. If we go over to the daily, let's see if there's any price action supports. All right, fine. What is that? I think that's a 200. Is that the 200? Yeah, that's the 200 EMA, and the purple line's the 200 SMA below. All right, fine. But it's a horrible retrace in price action. Directionality is broken. I mean, look, you're below the bottom line of the fork. Well, when they say that the equities markets have entered bear market territory, yeah, that's being expressed in the crypto space as well. TWAP on the monthly on curve has been breached to the downside. We didn't have that price action back here, so can't really assess too much with regard to directionality. I mean, technically, we're still very much in an appreciative direction. Maybe we could draw a fork somewhere else. I guess let's see what this looks like for 2 seconds. That's even worse. My goodness. Yeah, there's nothing going on that looks. I don't even know. Maybe we draw back here. I'm digressing for 2 seconds. I got nothing. I'm deleting it. It's completely useless. There's nothing pretty about that. So there's reason to be prudent. There's reason to be patient. And I don't think the deployment of capital is rationally warranted in any way, shape, or form. I want to hit some questions, but I think the biggest points that I wanted to make thinking about all this depreciated price action is the way the damn wealthy think. You got to accumulate some freaking stables, and that's everything. That's how you measure your portfolio, and you have to structure your portfolio in a way to grow your the capital you have, the units of account. And that's the measurement of success, how much money you made. And if you get in 20, 30, 40, 50% on your dollars, maybe that's a position unto itself. At least that's the way I'm heading into 2022. I'll give you a quick portfolio breakdown. Price action aside, I made no portfolio adjustments since I don't even know when at this point. Sitting on 20% stables denominated in MIM. MIM price point has been holding very strong. Heck of a stable coin. Incredible that the arbitrage has been so on point. And I think CDP stables are a massive deal because of what I said. Eurodollar stables having a potentially comparable functionality. So I'm quite interested in exploring that narrative as we head into 2022. That's a big deal. I mean, if stablecoins facilitate capital expansion along the lines of what was achieved with Eurodollars, this could be a big of big interest to traditional finance players, and that attracts capital, and that creates appreciation, encourages appreciation. So where do you allocate capital? The way I talk about it, you guys know my stories. I want cash flow, baby. I want to own infrastructure. I want to own stuff that facilitates capital flow, especially cross-chain capital flow, which is the number one position in the portfolio right now by size. Dan's in the house. Jordan's in the house. Tom is in the house. Hunter, Lucas, talking about CVX, a curve trying to buy. This is the last time I'm thinking about buying. I know a couple of folks that are buying some stuff, and that's what the more aggressive market actors do on a day like this. You know, GMX is a hot topic right now. It's well, that's a piece of infrastructure, and heading into 2022, what do we know? We know that we have reinforced that degeneracy is inevitable. So, you know, there's unfortunate overtones or sad overtones with that reality that people get desperate. And as this financial system becomes more and more strained, they will get more and more desperate. They will seek out gambling. And, you know, it's like those who own casinos. Damn, that's a business. That's a money machine. That's cash flow, baby. So, what are options markets? You know, it's a heck of a casino. So if you could extract cash flow from a casino, that's a heck of an enterprise to own a piece of. So, you know, I've been very tempted for a large GMX position. I don't have a portfolio the size of some of my peers, So I'm not in a position to diversify. And actually very proud of another person I speak with who who recently opted to not take a position that's very tantalizing, based especially the way I talk about it. But it would have been excessive diversification, and he couldn't achieve a position size that was meaningful. So you choose not to engage. So guys, this has to do with concentration on diversification. If you can't have a meaningful position size, you got to rationally abandon considering taking a position. If you're going to have like 5 assets and just trivial exposure, it's worthless. It's a waste of time. So you drop it. Can't own everything you want to own. You got to focus on things that are reasonable. You need to own position sizes that make sense, that could actually produce significant returns. If you have a half a billion dollar protocol that goes to $1 billion, you make 100% of your money. If you bought $100 worth of the asset, that's silly. If you bought a $500,000 worth of the asset and you turned it into $1 million and it's generating 30, 40, 50% return on the money, okay, now you're talking about a rational way to approach potentially taking a position. Position size, concentration versus diversification. Crypto bets. Hey, Noah, I have no questions, just here to listen to some rationality. Well, I hope my intro helps. I got a bunch of charts up. We'll go through them. We'll try and help some more. Lewis is in the house. Is it bad that I love crashes, Doctor? No, it's not. It's unfortunate that I cannot get messages out to more people and help more people understand. But really, what today is an expression of the prevailing market actor. And it just shows you that more and more people are getting into either equities markets or the crypto space that have no idea what the heck they're doing. Now, this is handled in traditional finance via processes of accreditation saying, "Oh, you're not good enough. You're not smart enough to engage in the market." And I'm more of a libertarian in many regards. Now, bear in mind, I'll be very brief politically. I have political ideologies across the spectrum. I have extreme conservative ideologies, clearly a libertarian. I'm a fan of open and access to drugs, whether illicit or prescription for medical purposes, and free access to markets. I don't believe in nanny states. I believe people have the right and responsibility to make their own damn decisions and seek out education to better themselves. They should not be controlled. So, man, I'd be a strange politician. I'm extremely conservative in many regards, but I'm a damn libertarian in many regards. So please don't be too judgmental on both sides of the political spectrum. Be judgmental of persons, I would say, that are one side. Open mind and rationality means we must entertain all things good and all things awesome and all things that make sense, for Christ's sake. Too many people are one side or the other, and that's not fair to everyone else. That's not fair to how you make a well structured, productive society. And that's not Anyway, I digress. I digress. Love your perspective on days like this. I hope I help with a rational approach to this insanity. Tom, opportunity abound. Yes, sir. I'm not doing a damn thing with the portfolio. I am being patient and prudent, and I am expecting some serious protocol drops and tokenomics pivots. And I mean, solidly has just got me very excited. And it's not solidly. Folks are chasing these damn NFTs across Phantom, and I think it's just pure degeneracy. I think that it's a complete red herring. Those DAOs, what ridiculous! That's insane. I'm tempted via like Beefy to extract 85% returns on dollars, and I could give a crap about their DAO asset. They're going to control an NFT. They have no idea what the damn NFT is going to do. A complete expression of irrationality, which is not unexpected. Isn't that status quo for how these things go? So you guys know where my interest is. I'm interested in capturing $10 a transaction on cross-chain capital flow because that's what multi prints at a $500 million protocol. I mean, literally, how many? Do DeFi Llama. How many cross-chain protocols we got? I mean, we know Aave's hinting about it, but their tokenomics are not iterative in many regards. Let's go over to Phantom. So I'm tempted for Aave. I'm looking forward to seeing what they do. Synapse is on the radar. Clearly, 0x DAO. What do they got? 4 billion. That's fucking disgusting. That's literally gross. I mean, literally, people are perverts. That's some degenerate shit right there. You can't make this shit up. VDAO and where's the other one? Radial. You can't make this up. $4 billion. I would dump if I was up 200%. I would dump that faster than I could blink an eye. What's on the top, baby? Oh, DJ. Let's take a look at the chart real quick. Quantified, Morning El Capitan, Rationality in the house, 11 likes. 96 people on the stream, 33 likes. We can do better. So technicals obviously are only a component of trying to understand the potential for a protocol. Certainly a falling wedge has been redrawn a couple of times. You got a variety of potential places to draw some trends, but clearly it's a compression to the downside. You have a breakout, and thus far it looks like a resistance flip support. All in all, price action aside, we can always expect continued depreciation. What do we have on the horizon? Some extremely strong narratives. TAM, total addressable market, is probably the largest in the entire crypto space. There's big money involved, $60 million worth of capital investments, big names associated with the protocol. Danny Andre involved, history with multi-chain.xyz. History with AnySwap. You got the AnySwap team, which is excited for the potential scale and scope of the protocol. To me, this is the largest capital allocation I got right now. I didn't buy up here. I bought before everyone saw. I bought about 1650. I think I was telling you guys, and if not, I was hinting at it. Doesn't mean purchase, and nothing I say means purchase, but you have to rationally consider all information and make decisions and live with them and have long time horizons and let narratives play out. You don't necessarily evacuate a position unless you have confluence suggesting narrative and valuation. Certain aspects of the curve narrative have been adjusted. Narrative invalidation has not occurred. It has a moat. It's the deep liquidity maker. It's an MMT money printer. It establishes critical liquidity for new protocols, creating new tokens. So that is not disrupted, but the price action sucks. So scale and scope, cross-chain capital flow, I think is larger. So I've used that assessment to rationally warrant portfolio reallocation. I still have a curve position. I have a legacy VE curve position of decent size. I mean, it's $151,000. It's really nothing to sneeze about. So I'm fully exposed. Get nice bribes. You go over to here, bribe that curve, that finance. I think I'm getting like 130,000 spell a week. So that's nothing to sneeze at. Clearly, spell has depreciated also. But at one point, that was $5,000 a week off of $151,000 curve position. So I'm still fully exposed. Nothing I could do to exit that position, even if I wanted to. It's locked for 4 years. And what do? I re-up the lock because time in the market beats timing the market. And no better way to have time in the market with strong hands than to lock it where you cannot exit. Spell looks like it has a double bottom potentially forming. This is a nice, if we zoom out to the daily, that might be Tweezies. Ooh, Tweezies! Look at them Tweezies. So this is a decent indication of potential bottom. I mean, this is significant depreciation, but considering all that's going on in macro finance, it was not able to push below a previous low. So thus far, you could say this would have been potentially the start of a large ABC correction, but it bounced, and then it bounced higher. So there's no head and shoulders, there's no inverse head and shoulders. This is a situation of complete uncertainty with regard to directionality. What we know thus far is that support is expressed around this region, zero point 0.5, zero point 0.6, zero point 0.7 pennies, and that's meaningful. That's meaningful for persons with a current position that are considering trimming or reallocating. And it's meaningful for persons that are considering taking a position. Personally, I would not take a position at all in this climate. 20% stables, baby. I'm sitting on the sidelines and I'm looking forward to solidly launching. And, I speculate we could have serious returns on MIM. What do we know about solidly? We know it's going to be based on MIM. That's going to be the denominator because that's the stablecoin that has the best cross chain liquidity. Excuse me, cross chain liquidity. We know, looking at the solidly smart contract for the ROC token, ROC is not the name that's defined in the contract, but we know, I could show you guys. Watch this. I'll show you what I see, and it makes too much sense. We've had hints that Solidly has cross-chain functionality. Does it take it down? No, it's still there. Let's take a look. Contracts. Token. So whatever token they're cranking out has deep integration. Okay, so this is right out of the contract, baby. And my gut says the entire protocol, the entire AMM is centered around MIM, maybe some sort of global MIM pool, Bancor style, and a capacity for cross-chain swaps, seamless cross-chain swaps. And what was my core 2022 narrative that I posited in December of 2021? Seamless cross-chain liquidity, interoperability, swappability, have capital on one chain, trade to another asset on another chain. And I think some big things are in the works. Now, a new exchange isn't that big. What may be even bigger is hints in social media commentary that a core part of the new protocol isn't even the damn exchange. It's protocol functionality and APIs so other protocols can consume the cross-chain swap router functionality. That means every damn AMM, Spooky, Spirit, Joe, Sushi, has a capacity to offer cross-chain swap and capital flow functionality. I'm keeping a big bag of MIM. My two biggest positions, MIM and multi. And that's my core thesis heading into 2022. Anyway, so obviously that was very specific. I am not here to encourage taking positions, especially in this particular market. But when I have my portfolio the way it is, I must clearly be transparent and be thorough with the narratives and stories I tell, expressing my positioning as well as why I talk about these things the way I do. What's bigger than cross chain liquidity? That's crazy sauce. And what's bigger than dollars? I mean, isn't that what the world runs on? And clearly that's being questioned in many regards. And I have my political commentary that I put on Twitter, and there's some serious shit going down, including potentially, uh, you know, certain three-letter words that I probably shouldn't say verbally on a Twitter stream, like a W asterisk asterisk R with other countries. Political conflict. And I think, I'll keep that content for Twitter. Anyway, let's keep going with some comments. I hit on a lot of topics today. I hope I offer some sort of sense of stability or way to look at these markets differently. Do you ever envision Magic Internet Money being top three stable? Speculatively, it could be the most important stable in many regards. Larry, you're welcome. Story remains the same. Inflation cannot go up further. Stocks will have to suffer this time around. How to control this accurately? I don't necessarily agree. I understand your point. Keep a pulse on my Twitter commentary, and hopefully that'll give you better insight into what's going on in macroeconomics. Daniel, hey Cap, did Justin Sun really make $3 billion on tracks? Listen, what? Yeah, he's got billions. I mean, we go. I have his account on DBank. It's massive, and it's all cash. He prints cash. He has a little bit. He has his cash in Convex. It's cash. All right, fine. Bear with me a second. I'll find it. It's down here. Copy. Well, he's got 3 bill. Boy, he's got 331 mil on Convex, but it's all stables. He's got a whopping half a million. He's got 2 mil worth of CVX CRV. He's got nothing. He's got $251 million in stable coins. He's got over $300 million in stable coins. More stable coins, 200 million. Compound, stable. 34 mil in Bitcoin for his account size. That's basically nothing impressive. A little bit of comp, basically just dust in his account. Pancake Swap, stables, probably stables. Trex BUSD, great. He's extracting liquidity or swap volatility. I don't know what the heck this shit is, but him and uh, and and Binance, maybe they have insider information about various assets. But you see what he does. Look, stables, another 400 mil, another 300 mil, a little bit of Bitcoin, a little bit of Ethereum, another 100 mil in stables, another 10 mil in stables. Absolutely extraordinary account. This is a stable heavy account. 98 mil. It's not even Ethereum Bitcoin heavy. This is pure stable heavy. This boy prints cash. Prints it. Anyway, let's go through a couple more comments. Go back. Cash flow and infrastructure is the main objective. Trader Z. I hope it helps my friend. AR, agree. We must remain rational. BTC crypto markets is down 50% already. Is it rational to think it there's lots more room to drop? Yes, I expect the unexpected. This market will go lower than anyone expects. Your goal in this market is to get what you get. It doesn't matter how you got it. As long as you got it, you hold on to it. You fight for it. You protect it, and you capitalize on it. Stablecoins. Stablecoins for me heading into 2022 is the biggest narrative. If you were able to come out of 2020, 2021 with any reasonable gains, protect your capital, make those 1% bets, you want to expand your wealth, capture cash flow, own infrastructure. Warren Buffett looks for deals. If he gets a discount, maybe a hostile takeover, which is something I'm sure he loves ever so much, he's going to acquire something that produces cash flow. And with cash flow, he has optionality to take over more cash flow enterprise and frankly do whatever the hell he wants because with cash you have complete optionality. One curious view. Fascinating to see the divergence between Ohm and time. What probability would you give Olympus surviving the bear market? Olympus will be just fine. Price action of Ohm is destined for basically $1 or less. Anyone looking at the price of Ohm or the price of time have no idea what the heck the market is. They have no idea what they're doing. The only thing that matters is G Ohm and W Memo if you want to get a sense of what the heck is going on in the market. Wonderland has completely pivoted. Tokenomics have completely changed. There's no bonds, there's no yield, and they are actively using their treasury to backstop, the NAV, the bottom end of the price point. So the only thing to ever look at with regard to those assets is the wrapped version, non-rebasing versions, and looking at anything else will absolutely drive you nuts and not give you a proper expression of what the heck the asset is doing with regard to price point. What APR range do you typically look for an investment that is much more to it than that? Cannot just look for APR. You have to understand where the capital is being deployed. You know the deal, you know the way I talk, and APR is not not much. I'll take 12%. I'll take 15% APR on something if it makes sense. It needs to make sense, and there's much more to it than just the APR presented. Question: Are you expecting a very challenging 18 months ahead? No, I'm expecting some significant pivots, extreme volatility, and some serious shit to go down, including potentially WAR. Yield providing good APY for stables on Phantom. You damn right it is, Liv. Oh, yes, indeedy. What are you getting? 20% on MIM nowadays? Whew. Let's take a look. Nope, wrong one. You're in dot finance. You go over to the vault. 34% on MIM. I got a couple of bucks in MIM available. Maybe I should just deposit that real quick. 34%. Oh, you know what? You know why? I don't like it. I don't like it. I don't necessarily like it because it's cranking out returns from that shitty 0x DAO. I have no interest in exposure to that. I don't trust it one bit. I don't trust it one bit. I am in an extreme protective mode with whatever capital that I've been able to protect. I am going to be patient, and I'm going to wait for Andre and Danny's manifestation, the emergence of the multi-chain and the multiverse, because if anything, you need a multi-chain for a damn multiverse. New York State of Mind, my man. Ritari is VE33 and Vampire Wars a red herring as well. VE33 itself, there is no market. It doesn't exist. But if something is trying to tap into that narrative in the Vampire War, you damn right it's a red herring. It's some garbage. You don't need this shit. Get your own exposure. These boys are purely capitalizing on degeneracy, trying to front run whatever the heck is going to play out. They have no idea how these markets are going to function, how VE33 is going to function, how Solidly is going to function, how Multiswap is going to function. Because the protocols haven't launched. The marketing material, the user interface presentation, the contracts is only a little tidbits. So anyone that's deploying capital, it's ape mode, which may outperform, but the vast majority of persons that deploy capital irrationally will not outperform, and they will get crushed. Arshel, hello. Hilda's in the house. New York State of Mind. If this was your first bear market, what you prioritize learning? Macroeconomics, understand a little bit of financials, dollar, bond market, Fed, monetary policy, inflation, deflation, and velocity. Important things. Joe, V33, brought a lot of liquidity to FTM, but is creating a lot of unpredictability. Some of the OG projects, yeah, it's complicated, my friend. How do you establish what position size is rational? Is there a particular ratio used to figure out position sizing? Must be gut instinct, my friend. You can only understand what a rational position size is after you fucked up and made it an irrational position size. Because then you're going to be like, oh, next time I'm not going to deploy as much because that didn't work out so well. So that's going to be subjective depending on your own experiences. I always like to say most things should be 1% bets unless you have a ridiculous confluence suggesting there's reason to take an oversized position. I have only taken few oversized positions in my entire time in the space. Very few. You never finished mentioning your portfolio allocation. I'm going to restrain myself today. I only mentioned my stablecoin portfolio size, 20% at the moment. I want to effectively and actively discourage persons from taking positions on a day like today. I know a lot of people will make a lot of money today buying at very depreciated prices, but in my opinion, it is best served to respect or to review hindsight in retrospect. Review what the heck got you here today. Take a step back, because if you got $500,000 that you were able to scrounge up, and you could get 20% returns on that on stable coins, you're making over $100,000 a year, which is more than the salary of a human fucking being going to work 8 hours a day, 40 hours a week. folks need to really zoom out a little bit and appreciate the extraordinary power of these protocols and what they're offering people, and not get sucked down the road of trying to chase Justin Sun's $3 billion. If it happens, it happens. You need to be rational. You cannot force the portfolio. The portfolio must be what it is going to be. If making 100% gains is worthless, not sure what that means. So, what would you do with a small portfolio? Um, Focus on what's important, which is work and savings. Savings denominated in a couple of things. First and foremost, cash flow. Income from work is cash flow. You accumulate it in a 10, 20, 30%. Well, you could expose yourself to increase going out on the risk curve with regard to stable return. In such an instance, if you got literally a $1,000 portfolio, all right, get 34% of your money. Work, save, work. And then you can dollar cost average into things like Bitcoin, which appreciate over time. And you could also make maybe 1% bets on other protocols that significantly outperform. 1% to 10% changes everything. Everything that I say about larger portfolios applies to smaller portfolios. The difference is smaller portfolios have less time in the market, have less experience, so should be more prudent. And the vast majority of the portfolio balance should be stable coins for an extended period of time, until you could get a sense of position size and balance and what it means to go out on the risk curve, which is why the 1% to 10% ideology is really very meaningful. Captain is multi a good entry price point now. What could I say about that? It could go down further. It could go down a lot further. If we zoom out, there's a fair amount of congestion right around this region. Previous resistances, double bottom, falling wedge, breakout, so far, resistance flip support. There's no reason it can't go down. So remember, I will always say that there's absolutely no reason an asset can't go down. What do we know? We know there's big money involved in this. The scale and scope of the protocol is absolutely immense. There's extreme brain power involved in this. There's reason for participants that are building the protocol to backstop price action, to maintain directionality and market perception of the asset. So I think there will be support from the market actors. But there's no reason it can't go down, at least with regard to volatility and influences from the broader macro market. Let's wrap it up in a couple minutes. Do you think BTC now has been officially captured by legacy markets? Bitcoin is an asset that I have very little interest in. It's not functional. It's not useful. It's great for billionaires. Everything that Michael Saylor talks about is spot on. How the hell are you going to carry money 100 years? Enterprise doesn't last. Buildings don't last. Real estate, it crumbles in 100 years. So he makes very, very well-spoken engineering points about the potential significance of Bitcoin over a 100-year time horizon. I think, in my mind, Bitcoin is a very good way for a person with 50 mil, 100 mil to express the desire to preserve capital over a decade, 50 years or 100 years. It's not going to get you 1,000x on your money. If you put $1,000 in, you're not going to retire. You're going to get no cash flow. You're not going to retire. So it's quite meaningful. I mean, really, with regard to dollars, you want to save, and you need to outperform inflation. So you need to get 20, 30, 40, 50% on your money. Great, you could do that. Dollar cost average into Bitcoin, create a portfolio, 1% here, 1% there, attempt to outperform, grow the stablecoin position, always getting yield 20, 30, 40, 50%. And that's how you build wealth over time. You force the portfolio, the odds are not in one's favor. FMAXI came and formed DAO, major FTM ecosystem, didn't get NFT either, is sad. Yeah, that sounds pretty sad. Badger's on the radar again. Badger has a lot of control over Convex. Badger's focusing heavily on trying to attract Bitcoin deposits, Bitcoin trying to generate returns, and that's meaningful. So I'm not interested in a position necessarily. I get tempted over many things, but I have a strangely strong capacity to restrain myself. But I like the way Spada Boom thinks, and I'm very interested to see how that protocol evolves. Hi, sir. Is there any good news when multi-chain will start paying out the generated returns? Probably sooner than later. Can you mint MIM with Doge? Yeah, can't you? I think you can. Let's take a look real quick. Clearly not on any of the other networks. Wrong page. Let's go over here. Raul, a pleasure. Dominic, off work early. Glad to catch you live again. Borrow. It's a pleasure, my friend. Let's take a look at see if there's Doge. I'm pretty sure there's Shiba. Shib. Oh, there's nothing. That literally fell flat on its face, dude. You guys got to realize there was a lot of SHIB liquidity, and those fuckers had no idea what they were doing. You could literally print dollars off a SHIB. Just they have no idea what they're doing. Listen, the most important thing is to get a sense of market actors. If you're getting involved in an asset that has dum-dums as the prevailing market actor, the second the market shits the bed, it's gonna get crushed. Dare we look at a chart? Dare we look at a chart? No, let's go over here, Bitfinex. Oh, goodness gracious, I don't even want to look at it. Hey, 13 cents. Oh, goodness. Every 4 years, the same thing happens over again. What a disgusting thing. I mean, everything's completely crushed. Shit. No, crypto cap. $18 billion. It was a 54, oh my goodness, 80 something percent. That's a disgusting chart. All right. How many places do you have MIM? One place. Dirty Sanchez, do you think about Vitalik's opinion on the security issue of cross-chain development? Sure, I do. I think it's a powerful functionality, and I think security is of paramount importance, and the market will figure itself out. Fine, I'll sell my Bob coin for any swap. Bob coin. There's nasty liquidations, especially on MakerDAO. Yeah, DAI is below peg. There's few stable coins that are above peg, and those are the stable coins that I would keep an eye on. There's MIM-USDC pair and sushi that pays out Phantom and sushi. You damn right there is. Alex, hey Noah, any concerns with the cross-chain narrative? Wait. All right, same question. Yes, there is. Good evening, Adrian. Does any have any revenue sharing program? They will. Waku's in the house. How are you, my friend? Mathis? I'm not sure I agree with the word APY in crypto because 1 year is just too long. Yes, that is correct. It is a dynamic, real-time adjusting return on capital. So the most people are completely deluding themselves to think the APY is reasonable, and it doesn't make any sense. Nobody in the crypto space is holding any of these positions for a year. I believe days like this offer a great opportunity for late entrants in the market, provided they can stomach volatility and have conviction. A subjective opinion, but I can appreciate it. How about Cosmos? Cosmos has been picking up. It's very nice to see. Cosmos hubs the entire ecosystem for that matter. And frankly, Astra Network was Octopus Labs, and there's going to be capital flow opportunity between Cosmos hubs and the Astra Network, which is a Polkadot parachain. Just a whole lot of stuff going on in 2022 is going to be very interesting in the area that I find most interesting, which is cross-chain capital flow. Watch that risk curve, my friend, Vaku. Joe, Bitcoin offers better interest rates than real estate. Yeah. So these are very interesting things. And you make a very good point and putting things into perspective. But bear in mind, real estate tends to be a little bit less volatile. So, we can have a stream where I talk a little bit outside the scope of the crypto space, how I think about real estate, how I think about equities and commodities, probably even more so. Um, That'll be an interesting show. Lewis, I own Spell, CVX, Dot, and Keeper in that order, my friend. Always a pleasure, my brother. Let's wrap up the stream Monday, January 24th at 12:35 p.m. As always, I thank everyone for joining me. Tell everybody to subscribe, every additional person. Hopefully, I could help. More people to help do better. My little slice of happiness. Thank you, everyone, for joining After Party on Discord for the most rational community in the entire crypto space where everyone believes that we can do better. I wish everyone a good day. I will see you on Wednesday.